Okay, well, seems like a few of you have joined. Thanks for making the time. My name is Lucas. I'm a senior analyst here at Into the Block. And today, of course, we'll go over fascinating insights about decentralized exchanges and automated market makers specifically. A few pointers as I get started with the presentation. If you have any questions specifically about any slides or something, just mention through the chat feature. Myself and our team will be answering questions there throughout the presentation. And in case you're wondering, we will record the webinar. It'll be available in our YouTube page tomorrow, so feel free to share it if you enjoyed it. And if you can't watch it all, don't worry, you can stream it through YouTube tomorrow. So I'll get started then. So a few key pointers how we'll go through the agenda for today's presentation. I'll start with a brief introduction to DEXes. I suspect most people in the audience are familiar, but just to get everyone up to the same speed. Then I'll dive into recent developments. It has been an eventful past couple of months for DEXes, so I'll cover some of the recent developments and key metrics to follow within DEXes and AMMs space, as well as the road ahead. So my thoughts on the future of DEXes. And before we get started, I wanted to share some welcome news from the team at Into the Block that we have reached 100 partners. So it's of course a great milestone for us in the team who have been working really hard to sign these partners from exchanges like Binance, Bitstamp, data providers like CoinMarketCap, blockchain.com, fintech and news sites, so Revolut. Some of these were launching in the near future. Wallets and blockchain projects such as Ontology, Dash, Algorand. You may be familiar with some of these, and if you don't see our analytics for them yet, keep an eye out, and we should be launching more analytics in more websites as well as support for more blockchain projects. Well, I'll dive into the core of the presentation now. I'll start with the evolution of decentralized exchanges. So firstly, what are decentralized exchanges? Just to get everyone up to the same speed. Decentralized exchanges have a few key characteristics. Essentially, they're non-custodial, meaning that there's no third party controlling your funds. The user is in control of their funds at all times. They're permissionless in the sense that anyone can access them, and then they're transparent. You can verify the protocols since they're open source, which ties in with the trustless natures of them, which essentially means that there's no third party to trust, and the trust is distributed across the system. And first iteration of decentralized exchanges started pre-Ethereum. So back in 2014, there were some attempts at DEXes, because they didn't really get too much traction, maybe too early. So one was NXT, which through a colored coins approach, they were aiming to essentially bring real world assets trading to Bitcoin blockchain, which, as many of you may know, isn't the fastest or doesn't handle that many transaction throughput. So it didn't really succeed. And there were some other attempts from Waves and BitShares, which as well didn't get too much traction. And then into the first generation of DEXes in Ethereum, there's EtherDelta and IDEX were some of the first ones in 2016 and 2017. They started with an off-chain order books approach. So they were trying to replicate essentially some of the infrastructure that we see in centralized exchanges with order books, but making them peer-to-peer, so matching orders on the buy side with orders on the sell side. As you can probably imply from the price chart, they weren't very liquid, as you can see. And that's also because the pairing of peer-to-peer orders had several issues. So essentially they functioned matching one order coming in with the other from someone looking to sell. And sometimes there wouldn't be orders in minutes or hours. And the worst cases, high volatility, even days would go by, even if you submitted the closest order in the limit order book. And they were costly as well. So they didn't get too much traction. And then there were protocols emerging. Many of you might be familiar with these, of course, that essentially rethought the whole approach to decentralized exchanges. And this was a big step because with the different infrastructure came different problems, but it also that definitely took the space forward. So this is through what's known as X times Y equals K. So this little formula revolutionized how decentralized exchanges operate, and it does so by replacing the limit order book with a liquidity pool of the assets X and Y and the total amount of liquidity K. And what essentially is done in the background, which is why it's automated, it's not users are not doing it themselves. In the background, these pools are being rebalanced, so it's the same amount and of X and Y, so same amount of liquidity K, and liquidity orders are available to users. And as well, they managed to incentivize liquidity by providing liquidity providers with fees. So in the case of Uniswap, it's 0.3% of the fees available. And it also introduced, as I was saying, other issues that weren't available in centralized exchanges, such as impermanent loss. So there is risk that if you supply ETH, for example, to a pool, and you leave it there, the value decreases over time. It's a risk. It's not for certain, but it's something definitely to take account if you're looking into being a liquidity provider. I'll dive into this a bit more. So as I was mentioning, the decentralized exchange space has increased dramatically, especially in 2020. And so I wanted to cover some of the recent developments that have caught my eye and many of you might be aware of. So already automated market makers were getting some traction in 2020. And of course, DeFi overall took an inflection point, a massive inflection point arising from comp liquidity mining. So they weren't the first to introduce liquidity mining. It's actually been done from synthetics for over a year, but the comp liquidity mining was the first to really catch a broad audience. And so within a few months, and the parabolic growth in value locked in comp and other protocols, it was naturally decentralized exchanges started playing around with yield farming. So here I have the first exchange. So for those of you who might not be familiar, Curve is a decentralized exchange for stablecoins. So it is critical for them, since stablecoins are supposed to be pegged to the dollar, it is critical for them to have liquidity. And they managed to incentivize liquidity through their CRV token yield farming, which is, of course, their governance token. And they managed to increase liquidity deposited by 4x within 4 days, which is quite remarkable. Also because, as I was mentioning, liquidity is key for them to operate. And it also generated a positive feedback loop where the liquidity deposited creates value for the users because it's more liquid, and therefore they can trade with lower costs, less price slippage, essentially. And it also increases potentially the value for governance token holders who may in the future be able to accrue some value from the underlying token. I'll mention some about this later. There's some risks that come with it, of course. So with yield farming, since the shares, the tokens are distributed pro rata, or depending how much liquidity you supply, the share that you provide, you get that same percentage in tokens. So as you can see, as soon as the CRV token was released, large transaction volume, which is an interblock indicator, reached over 16 billion, showing that a lot of the whales that had been mining CRV were eager to dump right away. And this, of course, as well as with its inflation, has managed to have CRV on a constant downtrend, making it such that only 0.01% of addresses are making money on CRV. Then came this Sushiswap Saga, which was controversial to say the least. It came with what people are calling vampire mining, which essentially was that the liquidity in some Uniswap pools would then migrate to Sushiswap and give and compensate users of those pools with Sushi tokens, which is now the Sushi swap governance token. And then, of course, the infamous founder of Sushiswap, Chef Nomi, took the 10% of tokens that were supposedly allocated for a development fund. He or she or they took the tokens and sold them for ETH, which of course created a lot of controversy. And since the token had already been listed in major exchanges, the token crashed significantly. And it was a complete disaster, at least for a few days, and stabilized slightly since. And then this was even before the migration. So then came the migration. Sam Bankman-Fried took over the keys of the protocol, and he was able, along with the community support, of course, and they were able to migrate Sushi. And I have a chart showcasing here the impact that it's had on chain. It's a sneak peek from something we're working on at Into the Block. So we were showing here the total value locked. So in this case, for decentralized exchanges, is essentially proxy to the liquidity supplied. And here we can see when Sushiswap launched, like officially migrated from Uniswap to Sushiswap, those pools took over 50%, I believe, of Uniswap's liquidity through effectively sucking out the liquidity, which is why it was called vampire mining. And it increased until a few days later, it started decreasing. There was a period of speculation of Uni doing their plans of a governance token, and correctly so, in September 17, Uniswap was announced, and September 18, Uni liquidity mining began. And you can see how it just increased remarkably, making Uniswap the first protocol to surpass 2 billion in total value locked. And in regards to the Uni distribution, it's actually one of the, according to my research, and I may be wrong, but I did research it in depth, it makes it the highest amount airdropped, at least for an ERC20 token ever. So essentially, early users of the Uniswap protocol, whether traders on top of the protocol or liquidity providers, even those who had a failed transaction in Uniswap, were rewarded with 400 Uni, which at the time were around $1,200 at an initial price of around $3. And with that distribution also started liquidity mining, of course, and they're distributing 20 million Uni over 60 days, so finishing in November 17. And it also led Uni by retroactively rewarding its users. They were able to capture the second largest holding out of any DeFi token, reaching over 85,000 addresses holding the token, which is remarkable, but also sheds light on the amount of usage that Uniswap has received over the past few years. And in terms of the impact that it's had on chain, as many of you may know, Ethereum fees have been increasing Also, along with DeFi adoption, have been increasing significantly over 2020. And in the few hours after Uni was released, hourly Ethereum fees approached $1 million, making it the highest all year. And it makes sense because the cost, even though gas cost increased to about 700 GUI, it was still like $1,200 worth of free money to claim. So it makes sense people were eager to claim their Uni, making Ethereum fees to skyrocket over the next 24 hours. To put into context, this is Ethereum transactions. On September 17, shortly after Uni was released, Ethereum managed to get 1.32 million transactions, the second highest in Ethereum's history. And that's even taking into account that Ethereum transactions have already been in an upward trend. This thus far has been the highest this year, and as I was mentioning, second highest all time. And for Uni, so this is transaction volume for Uni, within 48 hours, there was already 2 billion worth of Uni transactions being made. Now I wanted to cover the current state of decentralized exchanges. So this is a great graph from the block, the team at the block. It's separate companies, by the way. Some people sometimes confuse into the block with the block, at least in our customer service. But that's besides the point. As you can see here, the number of Uniswap, the volume traded in Uniswap managed to surpass Coinbase volume for September. And to put like this in context, I remember in April, I was doing a webinar about our exchange analytics, like exchange flows analytics into the block. And I didn't have, of course, foresight into the DeFi frenzy that would occur over the summer, but it was less than 0.1% of what Coinbase was trading. And it's now surpassed Coinbase volumes. It's also increased Uniswap's share within decentralized exchanges. So currently over 75% of volume traded occurs in Uniswap out of all decentralized exchanges. And it managed to grow the share of decentralized exchanges over centralized exchanges. This is according to the block as well, to 13%. And some critics have pointed out that, well, of course, you can trade so many more assets in Uniswap than in Coinbase, which takes a lot more cautious approach, to say the least, in onboarding these tokens, while Uniswap's approach is the opposite. It's completely permissionless. So you just need a Ethereum smart contract address, and you can be on Uniswap within minutes. And to answer those critics, there were the 90% of the volume traded in Uniswap is corresponding to approximately 80 pairs, I believe was the data I had seen, which is about the same size of tokens in Uniswap. So for the top tokens, they're already seeing head-to-head, at least for the past few months or past month. It's yet to be seen, of course, if the trend persists. Okay, and now, as I often do with the webinars, I wanted to shed some light into what we're doing at Into the Block. I was showing some of the insights we had earlier, and I wanted to show you the full experience. So what we're doing, and we've been teasing this for a couple of weeks, months, we're doing a revamped insights section. We're focusing specifically on decentralized finance. So we think this is an area of long-term growth for the industry. It has already seen a lot of growth, of course, and some hype, but we believe in the long-term growth of this space. So we thought it was paramount for us to have a specific section for DeFi Insights. And we'll have an overview of the whole industry, as well as a comprehensive deep dive into some of the key protocols. So similar to the approach we have with our token analytics. And I will show you here, 1 second. So yes, it's here. As you can see, we're launching DeFi Insights. We will have, I'll dive more into the DEXes part, but you can see we have key metrics such as market cap, value lock. There's some issues with the data because it's in our dev environment. There's the percentage of Bitcoin circulating supply in Ethereum, as well as the Ethereum locked. We have some metrics for active addresses, for power users. I know some of us at the Into the Block team have been using this metric, the gas cost heat map, to know when it's the cheapest times to make Ethereum transactions and essentially use DeFi protocols. Unfortunately, for most of us, it's around at Saturday at 2 a.m. But that's just a good metric to know when it's the cheapest and the most profitable to use DEXes. And of course, as I was mentioning, we will also have metrics for specific protocols. And this will be an incremental release. So we're releasing initially 4, and then we will be continuously adding more every other week, according to what our users tell us, as well as our partners. And by the way, which many of these indicators are based on strategies we work on with quant funds, who are essentially having trading strategies with our data. So users should be able to have actionable data and actionable insights. It's our goal with the data that we're showcasing. Now back to the DEXes section. So as you can see, this is filtered. So we'll change it so it says DEXes token market cap. And you can see the share of tokens. It's still working data, so unfortunately Uniswap's not here. But you can see the market share of DEXes and how the market cap overall has varied over time. Also how it compares to Ethereum. Also the top 5 value locked, as I was showing earlier, and how it changes over time for top protocols. And we have a comparison of the top pairs in terms of liquidity and in terms of volume. And we're starting with Uniswap and Sushiswap. But as we onboard more DEXes, it'll be exciting to see how those metrics progress. And I wanted to give you a quick overview of what our Uniswap page will look like. So we're tracking top pairs, and it's a bit more gamified. So we have like a ranking. So you can see kind of what's the hottest pools and where most return on liquidity is being earned, and which ones have been increasing the most. So in this case, USDC has grown significantly because of the Uni liquidity mining rewards. And apparently this token core has a ROL, so return on liquidity provided, of over 116%. So it makes no surprise that it starts as such a highly rated pool pair. We also cover key metrics, of course, such as volume and fees, liquidity provided. And then it goes super granular. It goes very into detail, as we like to do things at Into the Block. So literally any pair that you want to track in Uniswap, it's pretty much endless. So it's easier to look if you want to search the user. You will be able to do this soon, by the way, in the next few days. And we show key metrics, so the amount of liquidity supplied, the volume and fees. So if you're a liquidity provider, where the fees are distributed amongst liquidity providers, what's the fees per liquidity supplied, and we show that we show these with a 1 hour projected APY, but also like a moving average of 24 hours to have a better estimation how they track over time, how they're trending over time. So in this case, you can see it's around 10% return on liquidity for the USDC ETH pair. And you can track how the liquidity within the pool varies over time. So this is going back to the X times Y equals K formula that I was explaining earlier, how the prices of the assets vary over time, the swaps from one token to the other. So you can track the inflows between USDC going to ETH and from ETH going to USDC, as well as the liquidity supplied on both sides of the pool, and a very granular breakdown of transactions. And one we're very excited about, of course, we couldn't leave behind, is the impermanent loss slash ROI calculator. So here you can input, so imagine you're deploying $1,000 to this pool, and you're deploying, you want to compare versus your return on just holding ETH. And you can see how your return would vary over time. So at the moment, you would actually have an impermanent gain. This is likely because ETH prices trending down rebalanced the pool more towards the USD side. So you would have actually had an impermanent gain from holding ETH in this pool. And this is not accounting for uni rewards, which we intend to add later. But well, I've rambled enough about our DeFi release. You guys will be able to play around with it in a couple of days. I had some screenshots here in case there were some issues. And finally, I wanted to conclude into what are the next steps for decentralized exchanges and AMMs. So one of the things that I'm noticing, well, a lot of people in the industry are noticing, is that a lot of these tokens that have high inflation in terms of yield farming incentives aren't, they're having issues essentially accruing value for their tokens. And due to the high inflation, liquidity providers tend to just sell right away, which is also why protocols like Yearn are constantly selling yield farm tokens. And one of the things that I'm looking for long term for this space to continue to develop is for value accrual for token holders. So one of the options would be to integrate staking rewards through which the users would be able to also earn part of the fees that go to liquidity providers, but that it goes directly to uni holders or Sushiswap holders. And this would encourage essentially users to hold their tokens, potentially also increasing the price of the tokens as they also have essentially share of the dividends, if you will, that these protocols are essentially capturing. Another key step, of course, there wouldn't be a complete webinar if I wouldn't talk about scaling. So right now, I believe Synthetics has been the first protocol testing optimistic rollups. Uniswap is meant to start testing rollups as well in Q4, I believe. So this would be great in taking usability a step further, by driving costs down, of course, and also making transactions quicker for users. So right now, unbelievably, it's been operating solely out of, well, for most AMMs, out of market orders. I know a lot of AMMs have on their roadmap limit orders where you can just put an order at a certain price. And I'm looking for less friction, so steps to be reduced for non-ETH holders. So right now you need to set up your MetaMask account, buy ETH, and then you can use a DEX. And tied to that is also cross-chain integrations. So you can also access assets that are not built on top of Ethereum. Finally, just going over the webinar, DEXes have seen remarkable growth in 2020, so over 100x within 9 months or so. Providing liquidity or LPing can be profitable, but it comes with risks, of course, and you can track those with the impermanent loss calculator soon add into the block. Yield farming cost was definitely a point of inflection for DeFi as a whole, and DEXes is no exception. So it allowed a lot of liquidity to enter and create positive feedback loops for users of these protocols. But it also caused the issue of high inflation and token depreciation. So what I'm looking for next is for implementations that will yield essentially value accrual mechanisms for DEXes token holders, and also scalability to reach a broader audience outside Ethereum. And yeah, finally, keep an eye out for our DeFi Insights release in the next few days. We're really excited about it. Our team has been working day and night for months. So we're excited to share with you. And thanks for joining me on the webinar. Our next webinar will be slightly more introductory, covering some of the key metrics of the DeFi space overall. Make sure to join. Our CEO, Jesus, will give you an overview of the main metrics to stay up to date within DeFi. Outside of total value locked, there's a lot of metrics that are essential for users to have a great understanding, a solid understanding of DeFi as a whole. So we invite you to join, and now I'll answer some questions. Thanks for joining us. Okay, I don't know if you guys want me to cover something that I went through. If you have any questions, okay, they started popping up. What is, so Chris is asking, what is your unique value worldwide? So I'm not 100% sure what you mean by unique value, Chris. If you mind clarifying, do you mean USPs? Is that for into the block or for DEXes that you're referring to? So the unique value measured in terms of, I'm unclear because the webinar is mostly on DEXes. So as I mentioned at the beginning, we do have 100 partners and a growing number of thousands of users, but it's mostly meant to focus on DeFi and DEXes Insights. So I don't know if any of you guys have questions about some of these metrics. Okay, and Fernando is asking, will all the DeFi data be available through API as well? Fantastic question. So at the moment, the API is available for institutional partners. We hear you, Fernando. I'm advocating for an API to be available for our end users as well. We're working on it, and in the initial release. Unfortunately, it won't be available through API, but we do intend to make this so that you can manipulate the data down the road. So Dan is asking, who controls the smart contract keys to change the code? So as I mentioned, with decentralized exchanges, users are in control of their, so they're non-custodial, users are in control of their funds. There's definitely programming from the teams and also from the community that can improve the code, but they don't touch the users' funds, if that's what you're asking. It's essentially, it depends on the protocol and how these are divided. If they have multi-sig or not, it depends by protocol. So Adjuster Blaze is asking, are DEXes independent of centralized exchange fluctuation, or is there a correlation? So we have seen some instances on liquidity migrating away. So we track exchange flows and into the block, and we have seen instances of when there is high returns on liquidity off chain. Since it's essentially lazy capital, you just set it on a market maker and earns returns for you. We have seen some migration this year from centralized exchanges to decentralized exchanges to earn returns on top of that. So it's a great question, and it's a trend that we'll keep an eye on over time as decentralized exchanges start essentially being a serious competitor for centralized exchanges. Marcel is asking, what's a timetable for adding all different DeFi possibilities? Does not end with Sushiswap. So we're adding ideally a lot more protocols. So these are the ones that we're starting on. So Uniswap and Sushiswap, but also we're launching Balancer within a couple of weeks. Kyber as well, Curve we're working on some strategies. So we intend to add as many DEXes as possible to give you a complete coverage of the space. And as well, that's for the in-depth insights. For the global insights, we already have their token data, which we'll be aggregating in charts like these, of course. Okay, another question from Dan. Outside of being a liquidity pool provider, what other actionable insights or opportunities do you foresee being taken from analysis of these metrics? So it's also good if you're doing arbitrage. So if you go dive deep into the Uniswap, you can spot when essentially the liquidity from one pool to the other varies significantly. It brings upon opportunity for arbitragers to bring the price back to such that it matches the K equivalent. So there's an opportunity there. And another, like this data is also, aside from liquidity providing, it's also useful to track the growth of DEXes overall. And going back to the return on liquidity, I guess it is definitely a growing opportunity for traders or market makers, which, as you can see, can spot handsome returns from returns on liquidity. Okay, Dan Masters is asking, but don't you get LP tokens when you deposit your tokens, and then at the moment, it's custodian in the smart contract? Yes, it's not a custodian. So your funds are stored in a smart contract, but the control of the funds is not over a smart contract owner. You can still withdraw it at any time. So change your LP tokens for your funds at any time. It's not like the keys to that smart contract can be like even in cases like the Sushiswap fiasco or whatever you want to call it. With the rock pool, it's not like they took out the liquidity from these pools. And I'm talking about legitimate or somewhat legitimate DEXes. Of course, there's some where the owners of the contract might be able to access funds and withdraw them. So of course, that goes with users doing their own research and not trusting shady protocols. But in general, for the legitimate DEXes, they do not act as custodians even when the funds are stored in a smart contract, which I think is what you were hinting towards, Dan. A few other questions from Marcel. What's the timetable for? Oh, okay, that one you already asked. And the smaller ones, and the new smaller ones. So for more DEXes like Dodo, I don't know, there's so many DEXes and DeFi protocols. We do plan on adding more support to, let's say, the long tail of the curve. Initially, these will be here. So for instance, in others, you can track here, and within the Into the Block website, you will be able to track metrics on some of these DEXes. So like, for instance, Swerve or so, which is like a curve fork. We have on-chain insights, and we will be able to link to these. But in terms of doing the explore by protocol granular, we'll start with the main protocols, which is where most of the activity is concentrated. All right, then. It's been a solid 10 minutes of great questions. I think I'll leave it at that. Thanks again. Thanks again, everyone, for joining us. If you have any questions or feedback, feel free to message me either through email or Twitter. We really appreciate you guys making the time to join us in the webinar. Hope you all have a great day. Bye now. Thank you.